Meanwhile, Pakistan's textile industry is eyeing new business opportunities as the U.S China trade war escalates, with hopes of filling the gap left by rising tariffs. But experts warn the sector still faces risks if steep U.S tariffs return once the 90-day pause ends.
Pakistan's textile sector is looking at opportunities to grab business as the US and China steadily hike tariffs amid an escalating trade war, Fawad Anwar, chairman of the Pakistan Textile Council, said on Wednesday. The $17 billion textile industry is Pakistan's top exporter and largest employer. President Trump on Wednesday paused hefty tariffs on many countries for 90 days, but not on China. Trump raised tariffs on Chinese goods to 125%, up from 104%. In response, China had earlier raised tariffs on US imports to 84%, vowing to fight to the end.
This is a war between the two giants, and everything else is collateral damage. The whole world is a collateral damage. How well we can negotiate, how much business we can grab from China, and there is an opportunity to grab from China. How well we can do that depends on how well we can sit on the table and negotiate.
Pakistan narrowly avoided a 29% tariff hike after Trump's 90-day pause. However, a 10% duty still applies to most US imports. Experts warn Pakistan's textile exports could lose up to $2 billion if the higher tariff returns.
Works for US as well, because they cannot sustain this 29%. The US retailer or the US consumer or the US suppliers like Pakistan or specific companies, nobody can sustain this big of a percentage increase. So this issue has to be resolved in short term.